But what's happening from now? From now, you have the Berlin factory ramping, learning how to do cars with less defects, with less like rework, and with higher volume. Same thing in Austin. We have input costs normalizing, things getting better, logistics getting easier, and all these things are significant tailwinds on the gross margin of Tesla. And at the end of the day, remember, Tesla is a tech product in which input costs are going to come down steadily within 2-3 points a quarter over the next maybe 12 to 18 months. And so that's going to fuel the gross margin. And our view is that unless Tesla cuts prices again by like 10%, gross margins now are going to start creeping up quarter after quarter.
Well, one reason they were cutting prices is in part because production was outstripping demand. And of course, they wanted to preserve their lead in market share. In terms of its full year production forecast, 1.8 million vehicles is lighter than what analysts were anticipating, 1.88 million. That's a good thing, right? What is your confidence that Tesla will hold to that?
Well, it's like, that's really what the quarter demonstrated, that Tesla can sell all the cars they're producing, and the adjustment variable is going to be pricing. Tesla is not going to compromise on ramping volumes because that's their future. If you want Tesla to be successful in the long run, you need Tesla to ramp volumes, and they can't like delay their production ramp because you have a slowdown in demand because of interest rates raising and like a more challenging economic environment. And in this quarter, Tesla grew deliveries faster than production, 10% sequentially versus 9% sequentially. If you grow a business 10% every quarter, you grow that business more than 50% every year, which is exactly what Tesla wants to achieve. So they are on track, and it's absolutely fantastic.
So when we talk about this idea here of how you sort of, I guess, match up or sync up the production levels that they're targeting, the 1.8 million vehicles in production with actual sales here, do you think not so much are they going to be able to sell those vehicles, Pierre, but are they going to be able to do them at a price point that is, I guess, commensurate with past profits and past margins?
Well, Romain, I think the level of confidence on their ability to deliver on the production side of things is very high. On deliveries and the logistics around deliveries that are not that easy, you know, when you're like close to exceed like 500,000 units a quarter, it's very high. On pricing, you know, it's really a question for your macro analyst. The one thing that makes me feel very good about it is that Tesla basically cut prices between 15 and 25% on a car. Can you imagine that in the last 6 months? And you've seen this price cut generating a massive boost that allowed Tesla to grow deliveries 10% sequentially in a market where other auto manufacturers are selling cars that are like rebuilding dealers' inventories. The reality of demand at the end of the market is an absolute disaster. So my level of confidence today is that the worst of the price cuts are behind us. They might still need to cut prices here and there to keep growing, and if they do it, that's the right thing to do. But I think that from now, like, the worst is behind us, and so maybe price cuts don't bottom quite yet, but they are not very far from a bottom, which means that gross margins from here probably expands with a very high level of probability.